Hey everyone, welcome back to my channel once again. This is Abhishek, who is definitely not a financial advisor and who is going to talk about today Haptic Technology. And the company dealing with this Haptic Technology goes by the name Immersion Corporation with the ticker symbol IMMR. So before we jump into the detailed analysis of this particular stock, I have a small request to please hit and smash that like button. And if you haven't subscribed to the channel yet, well then let me give you a reason, or rather reasons. So here are some of the very few stocks which I discussed with my patrons on Patrons of course, and whoever were interested, they jumped into this stock and the results are in front of you. Well, this is about patrons. Then why I'm talking about subscribing to my YouTube channel? Well, because out of these few stocks, I made a video on 5 of them. And of course, I was a bit later than when I discussed on the patrons. But surprisingly, I was one of the very first few YouTubers who actually bought these stocks on the YouTube platform. And then later people came and discussed about these stocks, and whoever watched my video at that particular time and felt interested to invest in these stocks must be up by minimum of 200% on all the stocks, maximum maybe 1000%, for example in case of ALPP, and 500% in case of DSGT. So I guess that's a good enough reason to subscribe my YouTube channel, right? Anyways, now let's jump onto the video. So guys, today we are going to talk about Immersion Corporation trading at Nasdaq with the ticker symbol IMMR. Currently, the stock price is at $10.76, which is actually 4.74% lower than the previous closing price of $11.29. The current market cap at the time of making this video is at $290 million, and the previous closing price was $11.29. And just to let you guys know, in order to avoid any confusion, the market cap which I will be using for the ratio calculations further in this video during the financials discussion will be from the last trading day, which was 5 days ago, when the closing price was $11.29. And since there will be not a big difference between the numbers, so that's why I did not edit the numbers. Otherwise I would have to record a big chunk of this video again, and then we would have a big delay to post this video. So anyways, now let's start. So let's go through the company's introduction quickly. So the company was formed back in 1993 when personal computing was still a new thing. So they began to change the way people interacted with their devices by implementing touch feedback, which is also called as haptic technology nowadays. So the company is, let's say, all about providing haptic experiences to their customers on various devices. Now, what exactly is this haptic technology or haptics? So to understand the technological terms like haptic technology or haptic feedback, which we'll get onto soon, it is important to understand the meaning of haptics, the word haptics. So haptics is the science and technology of transmitting and understanding information through touch. At its most basic, haptic means anything related to the sense of touch, which is derived from the Greek word for touch. The definition of haptics in science and technology, though, is more precise. It relates to the use of tactile sensations in interfaces. Haptic is the science and technology of transmitting and understanding information through the sense of touch, which we already know now. The most well-known example of haptics are probably the vibration in a mobile phone, which you already know. This is a very well-known example, or the rumble in a game controller like PS5 or Nintendo. So the vibration which you feel when you are pinned down or when you are attacked, that vibration is through this haptic technology, is created through this haptic technology. But there are actually a huge variety of applications, wearables, AR, VR experiences, and digital out-of-home advertising, and high-end military and industrial simulation as well. So the well-known examples are what you already know. The simple ones are the mobile phones and your controllers for your PlayStations or Nintendos. But guys, this technology is not limited to just those applications. We have many applications in which haptic technology is used nowadays, and we will cover those examples further in this video as well. So haptics is often used interchangeably with the terms haptic technology and haptic feedback. However, while the terms are really closely related, they are not exactly the same. So the main purpose of explaining you guys the meaning of haptics was to give you a general idea what this technology is all about, because it's the basic principle behind building this technology. And to give the most general examples of these gaming controllers and the mobile phones was to make the understanding much simpler and better. So haptics is actually a broader category which includes both haptic technology and haptic feedback. So together with the physiology and neuroscience of touch. So like I said, the principle of building haptic technology and haptic feedback is the same what we just saw before when I explained the word haptic. So how do actually haptics work? Now, different technology are used to give sensations that feel like solid objects and resistance. Device apply force, pressure, or resistance by using electric actuators, or let's say small motors, DC motors, pneumatics, and hydraulics. Now, for example, gamepads use electric motors to force feedback vibrations, what we feel in your controllers as well. And what is more interesting, some data gloves both track hand motion and use air bladders to harden and restrict your grip. So, like really controllers built within gloves, so robotic gloves. So, you can really feel an object in virtual reality. So, now coming on to what is haptic feedback, because this is actually what immersion specializes in. So haptic feedback is the use of touch to communicate with the users. Now, most people are familiar with the vibration in a mobile phone or the rumble or vibration in a game controller. But haptic feedback is much more than that. So human beings have five senses, but electronic devices communicate with us predominantly using just two of them, which is sight and hearing. But haptic feedback changes this by simulating the third sense, which is the sense of touch. Not only can you touch the computer or the other device, but the computer can touch you back. And haptic technology until today ranges from the vibrations in a mobile phone through wearables, controllers, and mid-air haptics, all the way up to high-end exoskeletons and full body suits that look like something out of Ready Player One movie. So I'm sure many of you already might have seen this movie, but if somehow you are not a fan of sci-fi, then I recommend you to at least make an exception and watch this movie. It's a really cool movie, and you will also become a fan of haptic technology, as you will definitely get an idea how cool these full body suits can really be in a virtual reality world, and you will also understand the tech behind. So anyways, these technology are largely confined to military and industrial applications. Consumer game consoles such as the new PlayStation 5 and the Nintendo Switch include sophisticated haptic feedback as a standard function. So now, why actually people add haptics to applications? There is sometimes an assumption, particularly in case of augmented reality or virtual reality, that the function of haptics is solely to increase the realism of virtual experiences. But that's only one side of the story. Now, adding haptics is not just to increase realism, but also to improve user experience. There are a lot of evidence out there that actually proves that adding haptics reduces completion time and error rates. Users also consistently prefer interfaces that include haptics. The other reasons people add haptics include is as an alternative channel of communication when visual or auditory channels are busy and the emotional component of touch is available. So this is particularly important in applications such as marketing and immersive entertainment, but not just marketing and immersive entertainment. So if you see in automobile, being able to safely drive a car requires a large amount of information gathering and processing. Our auditory and visual sensors are doing most of the work, right? So you have to concentrate on the driving with your hearing sensors and your visual sensors, and therefore they are busy, yeah, and are being saturated with all the information what they have to process or to drive carefully. So for that reason, auto manufacturers are increasingly looking at haptic technology as a way to communicate essential information to a driver and not to allow for more user input via touch. Among the big shifts in automotive design over the last few years has been the introduction of a dashboard display. Now, recently, these displays have included touchscreen capability, and a few have haptic technology as well to offer tactile information related to the button presses. So a state of the art trend in this area is captive touch technology in dashboards. This allows for more input control, which can cut down on the number of mechanical switches on a dashboard. So you see that using the haptic technology in automobiles is not just for marketing purposes, it is actually to prevent much more stress to the driver, and like you can see that to just prevent much more mechanical buttons on the dashboard, which is actually confusing for many of the people, and just to have a sense of touching a real button is actually really helpful. And not just that, guys. So cars are nowadays increasingly and becoming much more advanced at understanding their surroundings and reacting properly by offering safety warnings and alerts. Now, rather than annoying lights or noises, information can readily be sent to the driver through vibrating alert. So like we already saw before, that when the visual sensor for the driver is already busy, then the driver might not pay attention to any red light, no matter how much it might blink on the dashboard. And that's when haptics feedback comes into play with the touch tech to alert the driver. For instance, you might have experienced this when a car has lane changing assistance, and if you just accidentally try to go into the wrong lane or the other lane without the indicators, then you feel a strong vibration on the steering wheel to alert. And this is just to alert you that, hey, please be attentive, you are going to the wrong lane. And that's all haptic feedback. So guys, haptics is not just limited to gaming consoles or media marketing, but it is really helpful to improve user experience. So therefore, why to add haptic feedback? Well, visual feedback is used for many different purposes, from a flashing warning light to a desktop interface to the immersive experience of a VR headset. It's the same with haptic feedback. There's a rich spectrum of ways in which it can be used, like we already saw. And in automotive, haptic feedback allows manufacturers to create a non-visual mode of interaction like vibration, like we already saw. However, in marketing, then it's emotional component of touch that is important, yeah, which is quite normal to for the marketing. And adding haptic feedback is proven to have significant impact on customer engagement. And when added to user interfaces, haptics is all about reducing task completion time and improving accuracy. Creating multisensory experiences that incorporate haptics is also increasingly recognized as central to natural interaction and the next generation of UX design. So guys, now I think that the word haptic or the meaning of terms like haptic technology or haptic feedback must be quite clear. If not clear, then I'm sure that now you guys are not feeling alienated to such terms. And why I explained all this with all those examples? Well, I certainly think that when we are trying to invest in a particular company, then we should definitely know about the company's background and their product, right? So that's why it is really important to understand the product of this particular company, in this case, Immersion, and their product is this technology. So they are working with haptic technology and providing this technology to be implemented in other devices from other companies. So this is why it was really important to understand what is this technology all about, what is the meaning of this technology, how it works, because then only we can predict what is the future of this technology and thus the future of this particular company. And that's why I try to explain this technology to you guys so that you can have a basic understanding of this technology. So these are some of the use cases, or let's say applications, where Immersion's haptic technology is already being used or will be used in future as well. So for example, in automotives, mobile phones, industrial homing applications, gaming. So for example, haptics applied to the flat screen touch panel right here, as you can see in automotives or anywhere. It provides this sensation of pushing physical buttons on, let's say, a washing machine, or feeling the clicks to adjust temperature on a freezer, or that home button on the old iPhones 7. And these tactile feedback confirms each action as users are scrolling through multiple menus, and the haptic buttons, or let's say the buttons which gives the feeling of pressing a physical button, can be anywhere on the screen. And now, financial analysis. Okay guys, so now let's quickly go through the company's finances and some key figures to understand the performance of the company and to understand the fundamentals of the company. So the company is trading with the ticker symbol IMMR, which we already know from the beginning of this video, and the company's market cap is at $305 million. And guys, just to clarify this, that this is the market cap at the time of making this video, and this will surely change as the price of the stock fluctuates. So this is just taking this particular number at the time of making this video, and
our ratios will be based on this particular number, but this can surely change. Okay, so now let's start with the company's income statement first. So the company's revenue in the trailing 12-month period is approximately $36 million. The gross profit is $35 million, which is quite good, and the cost of revenue is just $170,000, which gives us a gross profit margin of 99%, and this is huge. This means the company is profitable, and this is a really big green flag. But now moving on to the operating expenses, which is another really important criteria. So the operating expenses is $57 million, and as you can easily see, guys, that the operating expenses is much higher than the gross profit, and therefore the operating income is in negative $21 million, which actually then gives us a negative operating margin of 59%, which is our first big red flag for the company. So just to explain it to you guys, operating margin is the percentage of profit a company makes from its core operations, like using the equipment, inventory costs, marketing, salaries, insurance, funds for research and development, and etc. So all in all, operating expenses are necessary and mandatory for any business to run the basic operations to make the product. So now operating income being in negative is the first red flag what I see with the company, because if this is negative, that means the company might need external fundings, yeah, to fuel up its basic operations. So the company needs its basic operations to run. And the reason behind that, what I see is the stagnant revenue. So if I go to the financials of the company in Yahoo Finance, and if I open the income statement, so as you can see in 2017, the total revenue was around $35 million. Then in 2018, it actually spiked up to $110 million. And the effect of this I can actually see in the stock price as well. And then in 2019, it went back to $35 million. So you see that the revenue has been stagnant and it's not actually rising so much. So this is one of the reasons which I can think of behind the company's negative operating income or operating loss. So if the company faces a revenue growth, then I am pretty sure that this can be actually prevented. But another huge factor worth the concern for the investors would be the operating expenses. So they literally have to control their operating expenses in order to improve their operating margin. Now, if you guys are a regular viewer of my channel, then you should definitely know that how important these margins are: gross profit margin and operating margin. So a good operating margin could be somewhere between 15 to 20 or even 30%. It depends upon the industries, but this being in negative, it's really a big red flag for me at least. Okay, anyways, so let's move on to the balance sheet. And for the balance sheet, we will first have a look at their current assets. So the current assets of the company is at $106 million. The current liabilities just at $11 million, which gives us an incredible current ratio of over 9. So this is quite good. So anyways, after a big red flag, we have a good green flag. And this of course means that the company is not going to have any problems in the coming 12 months at least, or even in the future, because as I see that the total assets for the company is at $124 million, and total liabilities, long-term liabilities or long-term debt, is just at $41 million. And then if you see the end cash position of $86 million, which tells us that they can easily pay off their total long-term liabilities with just their cash position. And therefore, the company is actually having an incredible balance sheet. So if the income statement showed us a bad red flag, well, here it's a really big green flag. And then the net tangible assets is at $83 million. So for those who are not aware about net tangible assets, I already covered this in my previous video. So net tangible assets are the assets which are actually tangible, so the company can actually liquidify them. And non-tangible assets are the assets like goodwill, which the company cannot actually liquidify. It's just a goodwill for acquiring this particular company, or let's say the other company is willing to pay more because of the reputation of the company. So anyways, so these are the net tangible assets, and it is at a really good position of $83 million, which is higher than the total liabilities. So at least we have a good balance sheet for the company right here. So anyways, moving on to the cash flow statement. And in the cash flow statement, firstly, we have cash flow from operating activities or operations, and we have minus $34 million, which is again a big red flag. Now, cash flow from investing activities is actually in positive $10 million, that means the company might have sold some assets in order to generate some cash. And then the cash flow from financing activities is at minus $1 million, which is actually quite good. So usually the cash flow from operating activities, investing activities, or financing activities should be in positive because it's cash flow. But a negative number is not always bad. For example, cash flow from investing activities can be negative when the company is heavily investing in the plant or equipment in order to expand the business. So it is not actually that bad. And also the cash flow financing activities, if it's a big positive number, it is also not that good because it means that the company is actually funding or having or increasing their cash positions from outside funding. So this is also not that good. So the company should be able to increase its cash position from inside the business, or by making the company much more profitable by implementing different business ideas and new policies, like offering discounts or something to their customers for recurring revenue and to improve the cash flow. Okay, so now coming on to some of the important ratios, and the first one is our price to earnings ratio. So price to earnings ratio is currently at 0 because if you see the quarterly earnings statement, so in quarter 1 the company had negative 4.8 million in earnings, then in quarter 2 it had $712 million in negative earnings, and then in quarter 3 it actually became profitable. So the company had positive $2.8 million in earnings, but as you can see that only alone quarter 1 is beating the quarter 3 earnings. So we don't have the quarter 4 earnings report yet. So just considering these numbers, the price to earnings ratio is 0. So moving on to other ratios. So the second one is price to sales ratio, which is at 10.68. Then price to book value is at 3.6, which is not that bad. But then price to cash flow is 47, which is actually quite expensive. So let's say now a good price to book value could be under 3 and in general, and a price to cash flow, good price to cash flow could be under 20. So like we saw, this is actually on the expensive side considering all the ratios. But another factor worth considering is that many of Immersion's competitors, or let's say all of the Immersion's competitors, are not trading public, and this is what gives them an edge. So no matter how expensive they become, investors won't have any other choice other than investing in Immersion. So this is another positive factor for Immersion. But again, this is at a bit on the higher side considering their operating margin and operating loss and the negative cash flows. They really have to improve many of their processes. So looking at the finances and some key ratios, the company looks quite promising, to be honest, but it is also a bit on the expensive side for me. This is just my opinion. So anyways, so let's move on further. So now moving on to this next important point, which actually plays a really big significant role in deciding whether the company is a good buy or not, which is what could be the future market target value? And this is one of the questions which you should definitely be asking yourself every single time when you're deciding to invest in a particular company. And if we see here, the haptic industry is projected to be worth $19 billion by 2025. And now just considering the $300 million market cap for Immersion Corporation, and assuming that if Immersion, being one of the market leaders, can even acquire a small significant chunk of this industry, then this actually makes this particular stock and this particular company one of the good speculative plays. And this recent article right here actually shows that they might be, okay, just might be on the right path to actually acquire that significant chunk of market share from the complete haptic industry. So what actually happened is that the share price of Immersion skyrocketed on December 29th by 30%. This is because the analyst upgraded the price target from $13 to $15. So what actually happened is analyst Charles Anderson is bullish on the company's prospects related to Sony's PlayStation 5, which incorporates Immersion's haptic technology in the new DualSense wireless controller. So one of the notable additions to the newest generation of the game console in the inclusion of adaptive triggers in the controller, which facilitates a new level of haptic feedback for players. And the article further says that Anderson has been using the DualSense controller and called it a breakthrough for Immersion to score such a high-profile design win in a mass market application. Now, demand of PS5 has been off the charts, with units flying off digital shelves within minutes. And this is actually true that the PS5 just got launched and it vanished. And on the earnings call last month, interim CEO Jared Smith provided some additional detail around the PS5 opportunity, and he quoted as Immersion collects a royalty from each controller. So royalty is like a reoccurring revenue, and we expect more than one controller will ship per console over time to support multiplayer gaming and to replace worn out controllers. Smith said in early November the DualSense controller are already available at retail ahead of the PlayStation 5 console launch. So this is actually a really good thing. But yeah, and we will see the results of these sales in the quarter 1. So this is a good thing, and this could bring the company's revenue from being stagnant to increase, and we might see the results in quarter 1 2020. But for the royalties, which is a part of reoccurring revenue, we might see the results of these numbers a bit later in 2021. But according to me, guys, this is just one part of the success. From my point of view, it is the first stepstone. Yes, I definitely agree with that. But they would have to penetrate into different fields as well in order to get more projects like this, to get some more incoming revenue in order to improve their cash position and improve the worth of the company for the investors. So guys, my final take regarding IMMR would be, like I already mentioned, that according to me, it is a bit on the expensive side. So my strategy would be to enter into this stock with a very small position at $10.70, because I see that there is an upward trend and there is a gap between the simple moving average and the stock price. And then I will increase my position further if it drops until these levels at $10.36. And then because I see that after this level there's a big gap, so there's a chance that it might drop up to these support levels, which is at $9.52, and this will be the point where I will heavily increase my position into this company. There is a chance that it might fall below this, but in case if it doesn't fall below even $10.70, then also I'm okay with it, and I will increase my position later. So for now, I will just open up a position with, let's say, 20 to 30% of my investment, what I'm planning to invest in this company. And yeah, that would be my strategy, and I will slowly build up my position as soon as it reaches the next support level, which is below $10.70, which is at $10.39. So yeah, that would be my strategy, and if it doesn't go at these lower levels, then I will open up a position later as well, depending upon the chart analysis and the market analysis and how the company is performing. So yeah, and that's it. So with this, we wrap up the detailed analysis of IMMR, or Immersion Corporation.
So that's it, guys. That's all for today. And I know the video became a bit longer, but I just wanted to cover each and every aspect of this particular company so that you can find everything at just one place. So anyways, I hope that you really like this video and you will give this video a big thumbs up, because it really helps the channel to grow. It helps the YouTube algorithm. So anyways, that's it for today. I will see you in the next one, guys. Till then, stay safe, stay healthy, and ciao.